Good afternoon, everyone. Welcome to this webinar series in collaboration with Manulife Investment Management. My name is Franco Fernandez, and I will be your moderator for today's session. We are thrilled to have you here with us today. But before we dive into our exciting topic, here are a few reminders. Please ensure that your microphones are muted to minimize any background noise. And don't forget to take notes throughout the presentation. We will have a dedicated Q&A session at the very end of the presentation where we will address as many questions as possible. So please send us your questions through the Teams chat or in the Facebook comments section. Finally, please stay until the very end for a chance to win exciting freebies and prizes. All attendees will get an early access of this replay and an educational help book to help you in your investing journey with funds. Not only that, all attendees who have opened a verified Dragonfly account will get a chance to win 1,000 pesos cash credit in their Dragonfly account. So open one now if you haven't and stay until the very end for a chance to win. Our webinar today is all about funds and how they fit in your portfolio. Here you will gain insights into the dynamics of different funds, their performance, and the factors influencing their success. On top of that, the discussion will shed light into the pivotal role that funds play in optimizing and diversifying your portfolio. We are honored to have Manulife's Head of Wealth Sales, Mr. Zedric Matubis, who will be sharing his insights and expertise on the topic. Mr. Matubis is a chartered wealth manager, a registered financial planner, a SEC certified fixed income salesman, and an SEC certified investment solicitor. Prior to joining Manulife Investment Management, he was the vice president of Manulife Philippines, where he helped conceptualize retail and institutional distribution strategies for wealth products. He has more than 20 years of experience in retail banking and wealth management. Without further ado, let us welcome Mr. Matubis.
Good afternoon, everyone. Good afternoon, Franco. Thank you for having me. So, thank you for spending time with us this afternoon. And I'd like to proceed now to the presentation proper. So, today our topic is funds and how they fit in your portfolio. And obviously, before we answer this question, we have to talk about what funds are. And I'm sure some of our attendees know what funds are already. Some of them probably are not yet familiar with it. So let's go ahead and first define what funds are. So funds are basically legal vehicles wherein investors can pool their money together and then benefit from economies of scale, professional fund management, and diversification. So this is basically a different approach as compared to one person investing in directly to buying stocks or buying bonds directly on his own. Instead of that happening, you see here on this chart that investors, that's the blue icon there, they will pull their money together with other investors, and then they will the money that is pulled together will be invested in that legal vehicle, which we call funds, which then will be professionally managed by the light blue icon there, which is a fund manager. Now, the fund manager can either be a bank trust department or a trust corporation or an asset management company or even an insurance company. And then this fund manager will then invest the monies collected in assets that can potentially earn income. So securities like stocks, bonds, or cash. And then these will then generate returns for the fund in the form of either interest earnings, coupons, dividends, or even capital returns when the fund manager trades these assets, buys and sells. Now, with these returns generated, these can then be enjoyed by investors, by either by getting their money back or if the fund automatically gives out dividends. So this is basically how a fund will work, and this is basically the same wherever you are in the world. There will be just slight differences in legal frameworks or names, etc., etc. In fact, on the next slide, we will see here what are alternative names and other forms of funds there are globally, because you might have relatives in the US or in Europe, and they will probably call it differently there. Sometimes they are called unit trusts or investment funds or mutual funds or common trusts. Officially and globally, they are known in the industry as collective investment schemes. So this is the official term, collective investment schemes. In the Philippines, there are three popular collective investment schemes. And this is what is mainly distributed in the market. This is what mainly investors are looking for. So these three collective investment schemes or funds are called unit investment trust funds or UITFs, mutual funds, or variable unit life or variable universal life or VUL funds. No? So these are the three forms of collective investment schemes in the Philippines. So let's look at the differences of the three, no? And so that you will have more knowledge on what to pick among the three in terms of your investment decision making. So the first item that we'd like to compare the three would be what type of document covers the legal framework of these funds. So the first one is a UITF. It's covered by a plan rule or a declaration of trust. This is where all the information about the fund is put in. A mutual fund, on the other hand, is covered by a similar document, but it is legally called a prospectus, and then a VUL will then be covered by an insurance policy because essentially a VUL is an insurance policy in the form of a fund. People who can distribute or sell these products are certified by a regulating body. So, for example, for a UITF, they are called UITF salespersons or certified UITF salesperson. For a mutual fund, they are called certified investment solicitor. And then for a VUL, it's going to be a certified VUL agent. Now, ownership are evidenced by units in a UITF and also units in the VUL, while for a mutual fund, they are evidenced by shares of stocks or shares of the mutual fund. The regulators are different also. The UITF is regulated by the Bangko Sentral ng Pilipinas. The mutual funds are regulated by the Securities and Exchange Commission, while the VULs are regulated by the Insurance Commission. So in terms of insurance protection, both UITF and mutual funds are pure investment products. They do not offer insurance protection. If the owner of the fund, the UITF or the mutual fund dies, the account value will naturally go to the estate of the owner and will be given to the natural heirs of the owner. But for a VUL, there is insurance protection benefits. So not just the account value, but a certain premium on top of the account value. Depends on the type of VUL. But there is also cost of insurance. No? So VUL has certain insurance fees attached to it, while mutual funds and UITFs have none. Again, it's quid pro quo. You don't have insurance protection, therefore you don't have cost of insurance. So pure investments, when you're looking for pure investments, then UITF and mutual fund will be right for you. But if you're looking for insurance protection, then a VUL on top of the investment feature, then a VUL is for you. In terms of sales loads or entry fees, a UITF do not have sales loads or entry fees. In other words, whatever you invest, all of that will be invested by the fund manager. A mutual fund can have sales loads or entry fees, meaning a certain fee can be deducted by the mutual fund company or the distributor. And again, the key word there is can. It's not always the case, but they can if they want to. And they have to inform the investor about it. And similar to the VUL, VULs can also have sales loads and entry fees. So for the purpose of today's webinar, I'll exclusively talk about the first type, the UITF, the first type of collective investment schemes, because that is basically what is in the platform of Dragonfly, and it's also the product that we in Manulife Investment Management is able to distribute to customers, or the UITF specifically. So the next question that I'm going to tackle would be something that most of you will be wondering, because I'm sure since most of you are already Dragonfly members or have Dragonfly access to the Dragonfly platform, you are already investing in stocks directly. I'm sure about that, or most of you are, or are knowledgeable when it comes to buying Philippine stocks via Dragonfly. And the question that you might be thinking about right now is, why do I need to even think about funds when I can invest in stocks directly? Why would I rely on a fund manager to do something that I can do? Because I can access stocks actually directly through Dragonfly. So I'd like to answer this question by telling you that you can actually do both. No? So the first one, the most obvious benefit of investing in funds is instant diversification. So for all of those of you who are familiar with diversification, you know that it's basically not putting all of your eggs in one basket, basically not relying on one or two or three securities, all of your future, financial future relying on just a few stocks, no? And if the fewer you're relying on, the riskier it is, because that means one failure or one wrong choice, and your financial future is already in trouble. So an example of this would be the one on the chart there. Let's say there are three stocks that you like at the start of the year. Obviously, at the start of the year, you don't know how they will perform during the course of the year, the rest of the year. So, for example, you like all three companies. At the end of 1 year, company one earned 20%, or the stock price grew by 20%. Company two, the stock price grew by 10%. And company three, the stock price actually lost in value 4%. So if you did not diversify and you were unlucky enough to choose company three, then you really, not only did you lose money, but you also lost the opportunity to have some exposure to the other two companies which had a positive growth. But let's say you invested in all three companies equal share, because like I said, you don't have a crystal ball at the start of the year. You don't know what will happen to these three companies. So you invested 33% each of your money, 33% of your money each in these three companies. Then by the end of the year, you would be happy because you would have earned 12%, which is just the simple average of the earnings of each company. So what happened there was, because of the benefit of diversification, you got lower than the return of the best performing company, because you did not know which will be the best performing company, but at least you earned something higher than the worst performing company. You actually did something in the middle. So when one investment is down, particular investment or company three, the others will take care of it, or will have what will be up, and will therefore be something that will help you, ease the pain from losing that 4% in that 33% of your portfolio. And at least you did not, take a chance on the fortunes of one single stock. So the great thing about investing in funds is, just by investing in a fund, you are already diversified, because some funds can hold up to 30 to as little as 30 to as many as 100 stocks at any time. So there's instant diversification. And imagine how hard it is if you're going to invest in 100 stocks on your own. How will you choose the 100 stocks? How will you trade that, and analyze what to buy and what to sell? That's going to be really hard for you. So the next reason why you should consider investing in funds is affordability, and this is very obvious. If you're quite familiar with funds, you know that some have very low minimums. For our case, the UITFs of Manulife Investment Management that will be available in the Dragonfly platform, the minimum is only 1,000 pesos. So it's very easy. And if you remember my lesson in the previous slide, which is about diversification, if you would like to compare that to you diversifying and buying 30 stocks, and imagine if you'd like to make your life simple, you just say, I just invest in the 30 biggest companies in the Philippines. Ayoko na mag-isip, basta yung biggest, yung nasa PSEI, doon ako mag-invest. Tapos I'll just invest what I can in the minimum. You will need at least 100,000 pesos based on this chart, because there are minimum lot size requirements in the PSEI. Now, I heard the PSE is thinking of removing that minimum lot size requirement, but as of the moment, it exists. So therefore, if you want to invest in 30 companies, the biggest 30 companies in the Philippines, you will obviously need more than 1,000 pesos. You will need 100 times more than that, no. So so affordability is something that will definitely be a key feature when you're investing in investment funds, a key benefit when you're investing in UITFs, no. Okay, that's the second reason. The third reason is professional fund management. So this is the key question here. You have the ability to invest in stocks, like I said earlier. Why would I need another person to do that for me? There are three reasons. So number one would be the fund managers. They have decades of experience. You are probably new here, or you have some experience. So immediately they have certain advantages over you. Second is they have full time, and they are dedicated to the fund management, research and analysis. They have the time. It's their jobs. They are paid salaries to do this. So they essentially work 9 to 5, Mondays to Fridays, doing fund management. You are employed, or you have a business. You're busy with your family. You probably won't have time to beat the fund managers. No, you'd rather watch your telenovelas or your sports channels, rather than watch Bloomberg, for that matter, no. And you'd rather spend time with your family than looking at charts, no. Third reason would be fund managers would have access to some of the tools that you will probably have no access to. So this will include in-depth research. They will have access to actual company visits. Fund managers can actually visit, for example, the factory of a big company. They will be given access by the CEO and the CFO, because of the billions of pesos they have in investing power. I'm sure if you are a retail investor, you won't have that access. Fund managers will have software that are expensive, that will help them in analysis, in risk management, and fund performance monitoring. And they have other tools available to them that will not be available to you. You probably will only have access to some research, some TV shows, probably Google, and probably rumors. So immediately from these three advantages of fund managers, then you would see that a professional fund manager will have some advantages over you. So that's the third reason why you should also consider funds. Now, the fourth reason, and I guess this is also very important, is that funds give you the ability to access either companies, or themes, or strategies that are not available in the Philippines. So funds will give Filipinos the ability to access these global companies and these teams that are not readily available to them. No, so companies like Amazon, Alphabet, Microsoft, and Apple, these are very popular brands. They're the biggest companies in the world in terms of market capitalization and revenues. They have a globally diversified sources of revenues. No, they get revenues not just from the US, but they get revenues from Asia, from Europe, and you actually use these products. I'm sure a majority of you is using an iPhone. You're using Microsoft 365, Excel, Word, PowerPoint in your offices. You use Google, which is owned by Alphabet. Every time you're thinking of something that you don't know. And while Amazon is not present in the Philippines, it's only present, I think, using via the Prime TV streaming app. But it's one of the biggest companies in the world, no, and not just in e-commerce but also in tech, no. So these companies, if you just invest in stocks, it's hard for you to do that. You will need an international broker. You'll probably need thousands of dollars as initial investment. It's very hard for you to do that. But with funds, you can do that. With just 1,000 pesos, you will have exposure to these companies. You will have exposure to Apple, Microsoft, Amazon, and Alphabet. So this is just one example. Another advantage that a fund will give you, that can you go back to to the previous slide? Sorry, is the access to themes. No, so themes like technology, healthcare, and clean energy. Unfortunately, are not accessible in the Philippines. So we do have sectors here. We do have, consumer discretionary. You have your real estate, your conglomerates, but specific to, for example, AI or healthcare or clean energy. If you want to invest in these trends that are long-term positive, will have a long runway for positive growth for these companies, not just in the companies themselves, but in their stock price as well. You can't do it in the Philippines. You will probably find it hard to do that. But if you have access to funds, then it's a very affordable and easy way to do that. So let's talk about specific examples. So on the next slide, we can now go to the next slide. Let's talk about REITs. No? So REITs are starting to get popular in the Philippines. It was launched quite recently, but REITs have been existing since the 1960s globally. And offshore REITs can be accessed through funds. And we'd like to believe that in 2024, this is a great place to look into, because REITs usually do well when interest rates go down. And with the outlook that the Federal Reserve will start to cut rates with inflation normalizing, then there is really some positive outlook for REITs. No? So unfortunately, in the Philippines, when you access REITs, you only have a few choices, and it's usually office REITs, I think. And there's no really real diversification. No, there is some diversification, but you would probably need more than what is available in the Philippines. So a recommendation would be for you to look at funds that have REITs inside, or that funds that buy REITs. No, so think about these four REITs. No, Capitaland Ascendas REIT is Singapore's largest business space and industrial REIT, with 200 plus properties in Singapore, Australia, US, the UK, and Europe. So imagine your 1,000 pesos having exposure to 200 properties through the rental income, or have the ability to earn from rental income coming from tenants of these 200 plus properties in Singapore, Australia, US, UK, and Europe. And then Link REIT is the largest REIT in Asia. They own 154 buildings. All of them have tenants. And the value of these buildings is close to 238 billion Hong Kong dollars. No? So that's around, I think, 30 billion US dollars. No? So it's really a valuable REIT. They have the ability to earn rental income from the tenants in them. So if you are familiar with Philippine REITs, and then they work the same. No? So basically, you buy shares in a REIT. The REIT owns properties. These properties have tenants. Those tenants pay rent. The rent is shared to the owner of the REIT shares in the form of dividends. So that's basically how a REIT works. And like I said, while REITs are new in the Philippines, they have been existing for decades already globally. So these are examples of REITs, offshore REITs. The third one is Prologis. It's the largest industrial real estate company in the world, with 5,000 plus buildings, comprising about 1.2 billion in square feet, leasable area of 1.2 billion square feet in 19 countries, valued at $196 billion. And then Simon Property Group, it is the largest owner of shopping malls in the United States, worldwide, and it owns interest in 232 properties. So imagine having the ability to earn rental from tenants in these malls. No? So an example of a property owned by Simon, just to get you excited, is on the next slide. So the name of the property, you can Google this, is The Shops at Crystals in Las Vegas. It is owned by Simon. 18 million square feet in leasable area, and it's valued at $8.5 billion. So imagine rich people going to Las Vegas and going to this mall, and the key tenants of these malls are the ones that you can see here. Company names that that husbands don't like to see, because their wives are gonna definitely go there and buy stuff there. No, so Hermes, Louis Vuitton, Prada, Versace, Giorgio Armani, and Gucci. No, so brand names that are hard to pronounce but are even more harder to buy. No, so these tenants pay rental to the mall operator. which is Simon Property, and you, if you invest in a fund that has a Simon Property as one of its investments, will have exposure to that rental income. Will have the ability to get a share of that rental income that Hermes pays for to this mall. So imagine that, no? You actually own a share of that building, and funds can give you that power. So next slide, we'll see there another theme that you can access through funds is the power of AI. So why is AI a big story in 2023? People who know artificial intelligence or AI has been, present for decades, but in 2023 they just suddenly, took center stage and rocked the investment world. One big reason is ChatGPT. So ChatGPT is an application website that is popular, and it did something that Netflix did in 3.5 years. It did something which is reach 1 million users in just 5 days. So that's just how popular this is. It beat the likes of Airbnb, Kickstarter, Twitter, Foursquare, Facebook, Dropbox, Spotify, and Instagram. In the number of days, it reached 1 million users. It actually just reached it in 5 days, while these other big tech apps needed months and even years to reach that number. So and I'm sure your kids are very are very familiar with ChatGPT. They have helped. ChatGPT has helped them in their assignments, and that's not the only application of artificial intelligence. In fact, it is forecasted to really help companies in terms of revenue generation, cost efficiency, and all of these other things that will help them deliver a higher bottom line. So on the next slide, you see here, companies that will benefit from expectations from the boom that AI will bring. And in 2023, these companies really did well, and the biggest reason why they did well was AI, or the excitement over AI. So Nvidia is the correct pronunciation. Sorry, is the number one manufacturer of GPUs, or graphics processing units. People who are attending the session who are gamers, you are familiar with Nvidia because you need Nvidia for your laptop or your PC to perform well. But however, because of the great power of their GPUs, it is quite in demand right now, because of AI software really needs strong computing power, and the GPUs of Nvidia is very popular for that. They are a dominant supplier not only of AR hardware but also of software. And in fact, because of this excitement, imagine one stock tripled its stock price in 2023. So this stock grew by 239%, more than triple in 1 year. Microsoft is something that is also in very, very in place, with the AI boom, because it is using it. It actually boosted its investment in OpenAI, the developer of ChatGPT, in 2023. It integrates AI across its products and services. In fact, you'll probably see more AI services in the Microsoft 365 or Microsoft Office platform. More and more, you'll see AI being put there. And because of that excitement, Microsoft stock price surged 57% in 2023. And then Amazon, like a company that I mentioned earlier, has AI also in its future. No, it incorporated AI across their popular cloud computing platform. It's called AWS. It's very popular. Businesses uses this a lot, and with that, there was excitement, and the stock price surged 83% in 2023. So what if you wanted to have exposure to the artificial intelligence boom, to these companies or other companies that will benefit from AI? You cannot do it here in the Philippines if it is not for funds, because it's going to be hard for you to do it. You'll have to, like I mentioned earlier, you'll have to look for a foreign stockbroker and invest thousands of dollars. But with funds, you can have exposure with these companies with just 1,000 pesos. So other benefits on the next slide in investing when you invest in funds. will be the following. It's very easy to use. You can use Dragonfly's digital platform to do it. Very easy, digital. Don't have to fill out forms or sign documents. It's all online. There are options out there, unique options that are available to funds, and one of my favorite options or features is the income paying feature, meaning there are certain funds that can automatically give you income every month or every semi-annually, and we'll talk about that or more about that in the next slide. But that is something that you can also see there. And then I think this is something that's very important. UITFs are regulated by the BSP, one of the strictest, if not the strictest, regulatory body in the Philippines. So you are sure that fund managers are adhering to regulations, thinking about investor rights, making sure that they do not take too much risks, and they follow the regulations that are put there by the BSP to protect investors. So it's not it's not going to be haphazardly taken care of by fund managers just because of the fact that it is regulated by the BSP. So the next slide I'll show you examples of our unit or income paying funds. So we have 5 of them. And you can see here, you can actually invest in either AP REIT or Asia Pacific REIT or G REIT or Global REIT. There we have other funds that are invested in different asset classes like the Global Preferred Income. These are invested in preferred shares and junior debt globally. And then our all-in-one fund called GMADI or Global Multi-Asset Diversified Income. This fund invests in all of the things I mentioned: stocks, bonds, REITs, preferred securities, so that it can generate income. And then our most conservative income paying fund is Asia Dynamic, which invests in bonds only in Asia. So mas conservative siya dahil bonds lang ang laman niya. So if you look at the performance of the income paid out just for 2023, so you can look at Asia Pacific REIT gave out 4.22% in income in 2 payments kasi semi-annual sa Asia Pacific REIT. GPI used to be semi-annual, became monthly starting in July of 2023. So as you can see there, 6.24 net, and then GMADI 5.62 net, and then GREIT 4.41 net, and then Asia Dynamic, the most conservative one, gave out around 1.68% in just 6 months because Asia Dynamic just became income paying 6 months ago. So these are automatically given to you in cash. You don't have to withdraw it. You get something immediately monthly, and that you can spend it or reinvest it whatever you want, or you can buy Philippine stocks if you want to. But it will go to your Dragonfly account, and it's something that you can use whatever which way you want. So automatically given to you. So we'll go to the second to the last question I'd like to address, which is how does it look like? How does fund investing look like? Is it great? Is it hard? Is it volatile? Is it scary? So let's look at some examples to answer that question. So the first example is an investor who invested in one of our income-paying funds, the Manulife Global Multi-Asset Diversified Income Fund. Let's say he invested in July 2023, just when the fund became a monthly income-paying fund. Like I said before, it was not income-paying monthly, but it was paying income semi-annually. So, but for simplicity, let's say an investor decided to invest kasi na-excite siya na naging monthly na siya. So he invested, let's say, 100,000 pesos. In that fund July, as of January 17, and as you can see the chart here, it's not had been 2023 was not really a very, very super spectacular or great year. There was some downward movement in the price, but however, as of last week, this client already earned around 4.3% total return. That's including the capital appreciation because the value grew from 100 to 101,000 in that very short 6-month period. But not only that, but because of the income payout also of 3,200 for the last 6 months, that adds to the total return. So a healthy 4.3% return in just 6 months And it just happened that there was some volatility for this asset class during the year. So partida pa yan, meron pang masamang part of the investment that happened. No? So that's one example. Another example is, what if you were a little bit aggressive, you invested, let's say, a year before the pandemic, and you were already on your fourth year right now. What would it look like? So and then what if you decided to invest 1,000 a month, no? So you wanted to take advantage of Dragonfly's auto investment feature. So Dragonfly has an auto investment feature wherein every month your cash position is debited a certain amount and it's automatically invested. So very convenient, no? Pwede mo na kalimutan, no? Alam mo na nag-i-invest siya automatically for you. So for example, you invested 35,000 pesos right before the pandemic, and then you decide na every month I'm going to add 1,000 pesos. So that happened in May 2019. This was, I think, the time when the fund was launched. So after more or less 4 years, your fund grew by more than 40,000 pesos. That's around 47% or more, or around half of your money. In that span, and like I said, it went through a pandemic, it went through 2022, which was another volatile year, and yet you still earn money. Again, this is the value of long-term investing, because you invested during you were unlucky, you invested a year before the pandemic, and yet you became patient, you did not withdraw, you did not get scared, you stayed for 4 years, and your money is earning money, your money is earning healthily, at around 47%. So let's look at another example. Let's say you got excited about AI. You invested January 2023. So you invested in our fund called Global Technology Equity Feeder Fund. So this is our fund that invests in NVIDIA, Amazon, and Microsoft, and the like, no, the tech companies. So you earned in just over a year, you earned half of your money. Can you imagine that? 160, you invested 100,000, you invested 1,000 a month. Again, you took advantage of Dragonfly's automatic investment feature. So every month, nadadagdagan ng 1,000, yung 100,000 yung nilagay mo. By the end of a little bit over a year, your money, you earned 55,000 your pesos, and that's around a 50% return in just over a year. So these are the types of experiences that you can get from investing in funds, no? These are not always guaranteed, by the way, and I'm sure you're familiar with that. But if you're a long-term investor, then particularly in the third example that I showed you, then you can actually increase your chances of not losing money. In fact, it went through a pandemic and yet it still had a healthy return. So my last question that I'd like to answer is this question. Can you invest in both Philippine stocks and global funds at the same time? Funds and stocks, Philippines and global at the same time? And the short answer is yes, definitely. So we encourage you to do that, because you will get exposure to a wide array of asset classes, including stocks, bonds, and geographies, including the Philippines and global, and strategies. Plus, with the low minimum requirements of MIMTC and Dragonfly's very intuitive stock and funds platform, it's very easy to do. So an example here would be 50,000 pesos spread evenly among 4 funds, and 1 you play around investing in Philippine stocks, no? So you invest, for example, in the money market fund, the bond fund, the aggressive global tech fund, and the American growth fund, 10,000 pesos each, and then you have 10,000 pesos to play around investing in Philippine stocks. So this is something that you can do. So I think this is my last slide, and going back to you, Franco. Thank you.
Thank you, Mr. Matubis, for that very educational and insightful presentation, from teaching us what UITFs are and its purpose, to the benefits of funds in our portfolio in terms of diversification and exposure to themes not easily accessible in the Philippines. Now we'd like to open the floor to questions, so please send us your questions to the Teams chat or the Facebook comment section. Just to get things started, Sir Matubis, I'd like to ask you one question. What has been your investing routine throughout your career, and what valuable lessons have you learned along the way?
Yeah, that's a good question. So I'd like to be honest. Before I was in the investments world, I worked for a bank, and I did make mistakes investing. So the some of the mistakes that you might encounter investing would be not investing early enough, being afraid or being too confident that I'm still young, I don't need to invest now, or being ashamed of investing a small amount. I need my money to grow first before I invest. Nahihiya ako dun sa teller tsaka dun sa guard. Makikita nila maliit lang ini-invest ko. So that's another mistake. No, you can never be ashamed of investing a small amount as long as you invest frequently. And I've always liked the idea of investing frequently, and you can take advantage of Dragonfly's auto investing program there. So these are some things that I learned late, but I wish our investors will apply now that they know that, no. And then the third one would be diversification, no. So it used to be, there's a stock that I like, I'm gonna invest there. So happy sa simula, and then something bad happens. You then regret because you put a big amount in that single stock. No, so diversification is very important. So these are the things that lessons. So to reiterate, start early. Don't be ashamed to start small, but be frequent about it. And then third would be diversification.
Thank you so much for that advice. Now we'll proceed to the next question. Will the dividends received from dividend-paying constituents in the UITF be distributed to UITF holders, or will they simply be reflected in the NAV pool?
That's a great question. So for our funds that are available in Dragonfly that are income paying, investors will have the option to get the income payout be paid to them, and this will be related to their cash position in Dragonfly. And like I said, they can use it, they can reinvest, they can withdraw it, and then buy stuff, buy coffee or whatever, or enjoy the income. But they can also reinvest it if they want. I think our only requirement, I guess, is if I'm not mistaken, is if there's a minimum amount, that if the amount is small, the income is small, it will be reinvested. Yeah. So, yeah, the key feature here is that the customers will have freedom to do whatever they want with the income. No, they can actually enjoy it if they want, or they can reinvest it.
All right, thank you. Now for the next question. What are the best practices an investor can follow to grow their portfolio using funds?
Yeah. So again, because of the affordability of funds, auto investment is a great option. No? If you compare it to stock investing, then you need a certain amount to add to it every time. But when you're investing in funds, because the minimum is only 1,000 pesos, at least for our case, then you can do auto investment. Set aside that amount, whether it's 1,000 or 2,000 or 3,000, it depends on you, the amount that you feel that you will not need, na yung iniisip mo na pag hindi ko to ininvest, magagastos ko lang to. So i-set mo na sa mind mo na I'll have this set aside already, so I won't touch it. Let Dragonfly remove it already from my cash position, and invest it, para automatic na hindi na ako matempt, no? And that's a great way for you to grow your portfolio, because that means you are disciplined. You are also taking advantage of a strategy called cost averaging, meaning when markets are bad, when times are bad, prices are low, you are buying more units, no, because automatic yung pag-invest mo. So when markets are bad, you're buying more units, no. So this is a great idea for your portfolio to grow, aside from the fact that it can grow from the market movements or from the performance of the fund. But automatically investing periodically is very important, and that can really help can help you grow your funds faster.
Thank you for that great answer. Before we proceed to the next question, I'd like to invite the audience or the listeners to please ask your questions to the Teams chat or Facebook comment section. Okay, so for the next question, I am a new registered member of Dragonfly. 1K ang minimum sa funds pero 10K ang minimum sa funding ng Dragonfly account. Am I right? I think I can answer this. So yes, the minimum investment for funds is 1,000 pesos in Dragonfly. All right, next question. Topping up on your income paying UITF is not a requirement.
So like I said earlier, UITFs, there are no requirements to invest. The only requirement is the minimum investment is 1,000 pesos. That's the only requirement. And the minimum, if you want to add, is also 1,000 pesos. Also, if you want to use the auto investment facility of Dragonfly, it's also 1,000 pesos the minimum. Those are the only requirements. But if you don't want to top up, let's say what you want is I'm gonna invest 100,000 pesos. I'm gonna forget about it. And then if it's an income paying UITF, I'm just gonna get income. I'm gonna use it. I'm gonna spend it. I don't care. I don't want to add. You can do that. So that's the beauty of UITFs, the flexibility. Walang mga requirements, walang mga ano tawag dito, required top ups, walang ganon. Walang mga required top ups. It's up to you how frequent you add, how infrequent. It's really up to you. There is no requirement. The only requirement is the initial investment should be 1,000 pesos.
I'd just like to add, so yeah, with Dragonfly's auto investing, you can auto invest for as low as 1,000 pesos. So every investment will be automatically deducted from your account. Okay, so for the next question, given that you have funds for both local and global markets, how many % exposure do you recommend to invest in the local market and global markets respectively using funds?
That's a great question. So again, it's these types of questions, and I'm sure I'm going to see more questions about advice or recommendation. It's hard to answer because there is no one size fits all answer. It really depends on the person. So it has to be a very personal conversation. Like for example, if you're an exporter, for example, or an importer, you need to have you need to have some exposure to dollars more than a typical Filipino. That it really depends. Or if you're really a conservative person, then you might be concerned about getting too much exposure from offshore markets. So may mga ganung tao rin. Obviously, that's your call. So it really depends on you. It differs from person to person. But my general rule is really diversify. So if you can diversify, not just across currency but also across markets, no, you have investments in the Philippines, you have investments outside of the Philippines. That's the minimum requirement. You should be diversified, and yung allocation na lang, it really depends on how much do you put here or put there. It really depends on that personal conversation. There's really no one size fits all answer. So my recommendation, for example, in the last slide that I did was basically 10% 20% Philippines. No, actually 30% Philippines, because it has money market Philippines, bond fund Philippines, and then you play around with the Philippine equity Philippines. So that's around 60%. Then the other 40% is offshore because it's tech and American growth. So that's just a recommendation. Doesn't mean you should follow the 40-60 rule. But the idea should be there. There should be diversification.
All right, thank you for that very insightful answer. All right, for the next question, does Manulife offer income-paying funds, and what is the payout schedule? I am in my retirement and looking to get yield, but what flexibility to receive regular payouts of yield in my investment, just like how dividends are received in stocks?
Great question. So in Manulife, we have 5 funds, these that are income paying, and these 5 funds, as I mentioned earlier, are available in the platform of Dragonfly. Minimum is 1,000 pesos for all 5. 4 of them will pay out monthly. That's Global REIT, the one that owns the Simon Group mall that I showed you earlier. Has no, not owns, but has in its portfolio. Global multi-asset diversified income. The example that I showed you were in, it derives income from a multi-asset strategy. The Asia Dynamic Bond Fund, which is a very conservative strategy, only invests in Asian bonds, walang equities, walang stocks, so very conservative siya. And then the fourth one is Global Preferred Income, the strategy that invests in preferred shares and junior debt. No, so these 4 funds will pay out every month, and then the fifth fund, the Asia Pacific REIT, the one that is invested in Capital Land, Ascendas REIT, the one that I showed you earlier, and Link REIT, the biggest REIT in Asia, that pays out semi-annually. So, and to answer your question, yes, you can do whatever you want with the payout. No, you can use it, you can spend it. It's very flexible for you.
All right, thank you. So the next
Okay.
question. How much is the minimum amount we can invest in these funds, and what is the recommended amount for us to even feel the returns or losses? Also, to avoid both under and over diversification, what's the recommended number of funds we should invest in?
That's a great question. So, actually questions, no. So the minimum amount is 1,000 pesos, and the next question is what's the minimum amount that we recommend for you to feel the return. So for me, what's important is what you can invest, no. So look at your total portfolio, your total wealth. Shouldn't the amount can be different from person to person. A small a newbie investor who might just be starting, not the who's not the wealthiest person in the world, will always have that chance to invest in these funds. No, they might not be feeling the returns because it's like 20%. Alam naman natin 20% of a small amount is smaller than 20% of a big amount. But I don't want people, like I said earlier, to be discouraged by the fact that they're investing small. What's important is they are investing frequently, so that time will help them grow their money, and also the discipline of investing frequently will help you grow your money. So that should be, I think, the focus. No, invest what you can and invest frequently. Not look at what you can feel when returns happen. No. The last question is a very good question, because people say that over diversification is something that is real, something that can hurt you. But what can hurt you because of the fact that if you're over diversifying, then you're basically buying some stocks or getting exposure to areas that probably will not do well, and will probably hurt you more than help you. But again, it goes back to the question of, it's really hard to predict where markets are going. So it's really hard to say, which is it technology now that's doing well? Will that continue? Will the Philippine markets not do well forever? Yung mga ganun questions hindi natin alam eh. So it's always great to diversify. Having said that, we have a certain minimum. So maybe diversifying too much might be too expensive for you. Pero hindi naman, 1,000 pesos lang naman. No? So it really depends. We have clients who have that we are offering 20 funds right now, and we have customers who invest in every one of them. So I think the average would be probably 5 funds, ganyan. It really depends on you. If you really like, for example, technology, you're young, you use it a lot. You also like US companies because you believe that they're the biggest, so dapat meron kang American growth. But you also want to be careful, so gusto mo na meron kang money market and all of these things. So yung recommendation ko kanina can be a good start. Those are just 4 funds and 1 Philippine stock fund for you to play around with. So you can start with 5 kung you have that ability to do that.
Okay, thank you. For the next question, we have, what are the fund managers' outlook on the local market?
So this is a great question. So the past few years have not been very kind to the local equities market. I'm sure you know that. Inflation, COVID, and then inflation again in 2022. But we're seeing signs of improvements. No, for example, inflation looks to be moderating, particularly starting late last year. And we believe that may continue in 2024. If it does continue, that will mean the BSP will start to become more dovish, meaning will cut rates, and that will benefit local companies. So we're fairly positive with the local market, with some, but we also are cognizant of certain risks that are there, like risks like El Nino. And geopolitical risks are also still present. So, but it's definitely more positive than the previous years for the Philippine equities market.
Okay, that is great then. For the next question, I read somewhere that some finance experts recommend peso cost averaging, while some say it doesn't really work. What are your thoughts?
Okay, peso cost averaging definitely works. The only time that it does not work is when there is a straight movement of prices. No? So for example, if everything's rosy, markets are all positive, everybody's growing, walang volatility, stock prices only have one direction, which is going up, then it's better to invest all of your money one time compared to investing in frequent or periodic but in smaller amounts. No. However, that hardly happens. Yung stock price is going just one direction, no volatility. So generally speaking, PCA works because of the way markets behave, which is there will be pockets of volatility. And like I said, when there are pockets of volatility, because markets are unpredictable, sentiment is unpredictable, even if the long-term growth is positive, but if there are pockets of unpredictability, PCA will be better. Will help you because you have the ability to buy low when there's volatility. And secondly, I think which is more important is PCA gives you discipline, no? Forces you to save, no? And for me, that's a big benefit already because that prevents you from spending it unnecessarily. You know, pag hindi ka nagpi-PCA kasi, yung pera mo is always available, merong sale bigla sa mall, ano tingin mo mangyayari? Magagastos mo yun, di ba? So PCA helps you also in that regard because it forces you to be disciplined and also prevents you from spending unnecessarily.
Thank you. Now let's move on to the next question. Does Dragonfly provide detailed data of each of these investment funds along with their past performance? So yes, if you log into your Dragonfly account and find the funds page and click on a fund, it will redirect you to its dedicated fund page where you can find all the necessary information you would need to know before investing in a specific fund. Okay, next question. Is this like a gamble as per bank employees have told me?
Okay, so the short answer is no. There's a big difference between gambling and investing in funds. No, gambling is really relying on luck. No, there will be luck there. Number one. Number two, gambling, particularly if you go to a casino or a platform where somebody hosts the gambling, will always ensure that the house wins. Diba? They will have algorithms there that if you gamble long enough, you're always gonna lose money because that's the way they design their games. So that's the only way they're gonna earn money. Funds, for that matter, is different. No, there is professional fund management. There is analysis involved. There are rules that the BSP put in place. Fund managers can't take too much risks. They will need to follow certain rules that will help investors in or minimize risk or manage risk. And fund managers, they do earn money, but they will not earn because you lose. No, they unlike gambling, casinos, they will earn money when you lose money. Fund managers, we earn a very small amount of money. It's called the management fee or the trust fee. It's very small amount, and we earn more actually if you earn also. So because the higher the fund performs, that management fee is earned is a factor, is a factor of your assets under management. So if you earn a lot of money, we also do well, no? So it's a fixed factor, no? So like for example, 1.75% is a small amount of per annum is the management fee of American Growth, for example, that fund that invests in US companies. So it's a very small amount. 1.75% per annum is a very small amount. And you can earn 50%. We will still just earn 1.75%. Banks for that matter, when you invest in their time deposits or bank accounts, the reverse is true. They will tell you, I'm guaranteeing you that I will pay you 6%. If they earn 30% from whatever they do with your money, they're still gonna give you 6%. They're not gonna give you, higher than what they gave you. Unlike us, it's different. You will earn everything that we earn, except for that very small amount, that management fee. Yep.
All right, thank you. Let's see the next question. What is the ideal holding period for funds?
Great question. So our funds, we don't have that minimum holding period requirement. So any funds that you invest in, the technology fund, the REIT fund, the money market fund, the equity fund, the US equity fund, walang holding period yun. So you can invest now, then after a week you decide, wow, I earned 2%. I'm happy with that already. I need the money, or I have an emergency. You want to get your money? Yes, you can. There is no holding period. However, the good question here is, what is the ideal, no? So the ideal is really, particularly for the more aggressive the fund is, the longer the recommended holding period is, no? Because that means you will give it more chance to recover in cases wherein when there is volatility. So for example, if it's an aggressive fund, you probably should have a holding period view of around 3 to 5 years. If it's not so aggressive, probably lower. The money market fund, for example, our least aggressive fund, you can have a month holding period view there, kasi hindi naman siya masyadong aggressive, no? But as you become more aggressive, for example, the global tech fund, we really want you to have a longer, a medium term to long term view there, because it's very aggressive. The 50% in 1 year that I showed you earlier does not always happen, no? That's not guaranteed, and that will not always happen. 2023 was a great year for AI. That doesn't mean it's going to be always true. So if you're investing in this aggressive fund, I would really recommend having a medium to long term view.
All right, thank you. Let's move on to the next question. What is the outlook for your income-paying Asian bond fund going into 2024 onwards with potential US recession?
Well, it's like I said earlier, the Asia Bond Fund is our most conservative of the income-paying funds. Outlook is quite positive, with rate cuts being in the forefront. But we agree there will be some volatility, particularly at the start of the year, while the rate cuts haven't happened, and while there is the potential for a US recession. But having said that, even if there is a US recession, in fact, even US equities will like it. That means our view is that it might be a soft landing. And if given the fact that this is income paying, and also the fact that it's very conservative, being it is only invested in bonds, there are no stocks in this fund, then it's something that can really protect you during times of market volatility.
Okay, thank you. Let's move on to the next question. I read about the research from US that a fee of 1% yearly on return can cost 25% of our lifetime or 40 years. Investment returns. Is the funds differ from Philippines with regards to the question? Thanks, po.
Yeah, this makes sense because a fee of 1% or 1.25 or 1.75 per annum eventually can grow, no, particularly if it's a 40-year period. So that's why management fees need to be small, no, kaya they're small, no, number or relatively small, no. It's not 3%, not 5%, not 10%. That's why they're in the realm of only 1+%, no. Because if you invest really long term, it has the capability, it has the that possibility of you becoming large, no. But the point is you earn while that's happening, no. So that's why it's also very important for the fund manager to do its job well, no. You might told 40 years, 25% to you might seem large, but in 40 years if you can earn consistently 8% per year or not, you will definitely earn more than 25%. You will more than, I don't know, I don't have my calculator here, but you will definitely more than double or triple or quadruple your money in 40 years, because 40 years is a very long time. So the point is, as long as the fund on average is earning significantly more than 1.25 or 1.75, then it doesn't matter. What's important is you have that ability to get those higher returns. And by the way, when we showed you examples earlier, the 50% return in global tech, the 47% return in American growth spread over 4 years, the 4% net return in GMADI spread over a little bit around 7 months. These are net already of the 1.75 or the 1.25, whatever the management fee is. So wala na yun, nabawas na doon yung 1 point, yung sinasabi kong management fee, no, the yearly management fee, nabawas na doon. So when you look at your return profile, it's usually net of management fees already. If you look at Dragonfly now, look at the platform, look at how much Global Tech earned the last year, you click that, the one that Franco mentioned, you see more information. If there are returns mentioned there, it's gonna be net already of the management fees. So natanggal na doon yung management fees when you look at that, when you do your research.
Okay, thank you. Let's move on to the next question. You mentioned to invest little by little. What is little? They say to follow the 8K rule so it maximizes the commissions and fees. What's your take on this?
I think the 8K rule is if you do have fixed costs in your transactions. So I think this will apply to stock investing. But in fund investing, there are no fixed costs. All costs the only cost is the management fee, and it's not fixed. It will depend on the amount that you place in. So there is no minimum investment except for the minimum requirement, which is 1,000 pesos. Kasi the only reason why you will have, a minimum amount, a magic number, an 8K rule is if you have fixed costs, no. And we don't have fixed costs, like I mentioned earlier. Walang fixed cost sa fund investing sa UITF. So little can mean 1,000 pesos, literally mean 1,000 pesos.
All right, thank you. Let's see the next question. What is the stock universe that you select from? For instance, do you focus on dividend-paying stocks, small cap stocks, mid cap stocks for the funds? What conditioning or secondary stock characteristics do you look for?
It really depends on the strategy of the fund. For example, our Philippine equity strategy called Equity Wealth will be a core strategy, meaning it will look at So we'll start off with the large cap companies and then move from there. There is a certain level of risk it can take in terms of, investing in smaller cap companies. It really depends. So American Growth would be probably similar to that. So it will look at the S&P 500 as a start, and then go from there, work from there. Maybe look at other strategies. GMADI will have a stock allocation, and since it's income paying, then it will probably look at dividend paying stocks, or stocks that have the ability to pay out high dividends, at least for that portion in the equity portion, because GMADI is multi-asset. It can also buy bonds, preferreds, REITs, etc., etc. So that it's a very fund specific question. So it really depends on the strategy of the fund manager. So if you want more information, like Franco mentioned, you want to get more information on the strategy, then you can also go through the fund page and research more. It really depends on the fund.
All right, thank you. Let's go to the next question. Does Manulife also offer any balanced funds, a mixture of both fixed income and equities in a single fund?
Yeah, so GMADI is an example, global multi-asset diversified income fund. It will invest in any security that we believe that will help it generate income, because again, it's a monthly income strategy. So it will have both bonds and stocks in that fund. But generally, I think that's generally we have stock funds and bond funds, and we also like you to do that on your own. We don't have to create, for example, a Philippine Balanced Fund UITF. Why? Because the minimums are so low anyway. So if you want to invest in both Philippine stocks and Philippine bonds, you just buy Equity Wealth and Income Builder, 1,000 pesos each, without buying one single fund. No, so that's why we don't really we didn't create a Philippine Balanced Fund strategy, because the minimums are very small anyway. So, but we do have a balanced fund, global balanced fund, which is the global multi-asset diversified income.
All right, thank you. Let's move on to the next question. Do you think it is still okay to invest in the Manulife Global Technology Equity Feeder Fund, even if its NAV pool is at all-time high and it seems too high already?
That's a great question. That's always a question we ask. If it's performing too well, the question is it too late to invest? If it's performing too bad, is it now time to invest? Or I'm worried, do I invest here? So there's always a reason not to invest. No, for people who might be wary of investing, but for this particular fund, like we mentioned earlier, it did well in 2023, almost 50% in 1 year. Is it too late to invest? The short answer is we have a long-term view on most of our funds, if not all of our funds. Our goal is long-term returns, consistent long-term returns. So our view on, particularly in AI and technology stocks, is that there is a long runway, a long-term runway for it to go up. AI is something that is not a short-term play. It's not going to be a bubble. It has real long-term consequences on the potential revenues and efficiencies that it creates for companies. So if you're a long-term investor, aggressive one at that, very young, matagal ka pa naman mag-retire, and you like exposure sa tech, this should not be something that will worry you, because even if it's at a high right now, there's still a long runway for it to grow, particularly if you're aggressive and you have a long horizon. So do not be afraid of the fact that it did so well last year.
Thank you. Let's go on to the next question. What fund can you recommend for a newbie investor like me that is very scared of the stock market and finds it very risky, but wants to earn higher than the bank rates?
Yeah, so one way to do that would be the fund I mentioned earlier, the money market fund. Last year, it earned 4.87 net 4.86 net for our customers. So definitely close to the highest time deposit rates. It's it's one of the least risky UITFs that you can. I mean, if you look at the Philippines, you want the least risk in the UITF investing, then you look for a money market fund because it's only invested in short term government, most likely government securities, short term instruments. No, so very little volatility. In fact, if you look at the price charts, it's almost like a straight line. Like a time deposit going up, no? So it's something that a newbie investor can look into kung ang purpose lang naman niya is to experience UITF investing in the for the first time. Happy na ako, mabit ko lang na konti yung time deposit or ma-approximate ko lang yung best time deposit, and definitely 4.87, 4.86 is really on the high end already. Net yan, walang withholding taxes ang UITFs, no? So unlike a time deposit, a 5% gross TD will mean only 4% net, no? So this beat a 5% time deposit, no, because of that performance, no? So this is something that a newbie can explore, get his or her feet wet as a starting product para hindi siya masyadong ma-traumatize dun sa volatility, and at the same time earn something significant, no? And then maybe as you get to feel the fun investing through Dragonfly's platform, then maybe you can look into other more aggressive funds in the future.
All right, thank you. Let's move on to the next question. Will Manulife have plans to add more income-generating funds via dividends aside from the existing one? Thanks.
Yeah, definitely. We're always looking for strategies that we think that will excite Filipino investors. So income-paying strategies are one of them. So it's definitely it's definitely a possibility, no? So for example, typically over a calendar year, we launch 2 to 4 funds anyway. So if we believe there is an income-paying strategy that Filipinos will look into on top of what we have already, then definitely the answer is we're going to launch that.
All right, thank you. Let's move on to the last question for this session. Do you have different recommended funds for people of different age groups? Let's say a person in their 20s versus a person in their 50s.
Great question. So again, these types of questions are not, one size fits all question. There are many different factors that you consider when you're recommending funds to people. A 50-year-old will two different people who are both 50-year-olds will not necessarily have the same recommended portfolio. They will have different circumstances. But generally speaking, a 20-year-old can be very, very aggressive, and they have something that 50-year-old doesn't have, which is the element of time, no? So a 20-year-old will probably have a 40-year runway of investment, because if he plans to retire when he or she becomes 60, and while a 50-year-old will only have a 10-year runway, no, for that, no? So because of that big difference in runway, generally speaking, a 20-year-old can really go all out and be aggressive. Can just invest in equity funds, can invest in global technology. I don't care. I have 40 years. If AI, was not good is not good in 2024, then only becomes good in 2025, 2026. I don't care. I have 40 years to earn that money back, no? I have a big runway. I'm going to retire when I'm 60. So that is generally speaking, a 20-year-old can afford to become more aggressive, no? Having said that, a 50-year-old who is probably wealthy, who will not invest his all of his money in funds. He has other investments in conservative asset classes. Can also invest a big amount in aggressive funds. No, it doesn't stop him from doing that. No, so what's important is you have that internal review of your portfolio, of your goals, of your risk profile, what you want to achieve, before you have that magic answer. But generally speaking, a 20-year-old can take more risks than a 50-year-old. Again, generally is the key word there. Yeah.
Thank you for answering that last question. Unfortunately, that is all the time we have for the Q&A part. However, should you have any more questions, please don't hesitate to contact our social media pages. And now it's time to announce the winner of the 1,000 peso Dragonfly cash credits. The winners are Ron Gutierrez and Daniel Pisano. Please message our Facebook group page to redeem your prize. For those who did not win, don't worry because you still have a chance to win 1,000 pesos and a personalized consultation from Manulife if you attend all the webinars in this webinar series. The next webinar will be on February 8th and it will be about investing for every stage, funds at different life phases. Another webinar on February 28th and it will be about investing for your retirement. You may register for the upcoming webinars by scanning the QR codes flashed on the screen. Once again, we would like to invite you to invest in funds with Dragonfly, open an account, and invest in funds for as low as 1,000 pesos with no lock-in period and added fees. And now, as we wrap up today's webinar, I would like to express our gratitude to Mr. Matubis and Manulife for making this webinar possible. I hope you all found this webinar helpful for your investment journey. Thank you all for joining us today.
Thank you, everyone.